This week's winner, new stocks, full stop. The IPO Index up 8.6%, the best week in months. This week's loser, anyone who positioned for the SpaceX lockup release to be a bloodbath, at least as of Friday. It went the other way. After 3 straight down weeks, the AI sell-off has reversed. Biotech goes 4 for 4, and SpaceX nearly claws its way back to the offer price, all in 1 week. Let's get into it with this week's winners and losers. Welcome to the IPO Winners and Losers podcast. I'm Matt Kennedy, Senior Strategist at Renaissance Capital. Avery is out this week, so you've got me solo. And no, hey, don't turn off the podcast. I know you might normally like to kick back, relax, and listen to the two of us chat, but it's just me this week, so instead I'm going to say, get your feet off the table, lean in, and keep every muscle in your body tense for the next 15 minutes. All right? Good. Now, quick note before I dive in. This podcast is for informational purposes only, and nothing discussed should be taken as investment advice or a recommendation to buy, sell, or hold any security. Past performance does not guarantee future results, and one cannot directly invest in an index. For the full disclosure, check out the end of this recording. All right, so let's walk through the week because there's one big number that matters the most. The IPO index was up 8.6%. And the S&P 500 up only 3.6%. So that's a 5-point gap in the right direction. And it comes after 3 consecutive down weeks. I think every IPO investor was ready to put that July's no good, very bad month behind them. And that puts the IPO index back above 20% for the year. Closer to 21.5% with the S&P 500 up about 13.3% for the year. And just to take a step back here, a few weeks ago, we were talking about an 8% drawdown and questioning whether demand for the AI infrastructure IPOs had finally cracked. But that AI trade is still on and IPOs with it. So that tells us the drawdown was sentiment and not structure. Deals kept on pricing through it, filings kept on filing, and the moment AI sentiment turned, new stocks led the bounce back. Now, I will admit, a market that moves down more than 10% and then up 8.6% up in the span of a month is not a calm market. Volatility still reigns supreme, which matters as we consider the other way to frame the IPO market right now. This is last call. A typical deal calendar gives issuers one more week or so to launch before the August lull. We've been counting down to this for a few episodes, and now here we are. But on the deal side this past week, the biotech machine just kept on running. 4 clinical stage drug developers priced. Not one of them finished below issue. That's the sound of a hot streak continuing. Braveheart Bio, targeting cardiovascular disease, was the largest deal of the week and the best performing. It popped 65.6%. It's later stage than most, heading into phase 3 with fairly strong phase 2 data. It had a cornerstone investment from Fidelity, so that's something we always highlight. A crossover name anchoring the book does 2 things, de-risks the raise, and then it kind of signals to everyone else in the book that a sophisticated buyer has already done their due diligence. And cardiovascular just keeps on working. Thinking back to Cardigan or Scribe Therapeutics, big end markets, clear clinical readouts, real M&A optionality. And then the other 3, Atovia Therapeutics targeting chronic itching, Latigo Biotherapeutics with non-opioid pain relief, and then Blossom Hill Therapeutics going after cancer. So smaller raises, more modest debuts. Atovia popped 29%, but gave some of it back. And then the other 2 finished more or less flat. So not every biotech deal is popping, but that's not a bad thing either. I was actually getting worried because these biotechs were performing so well that I thought investors might start bidding up everything, and that is a recipe for low-quality deals. So I think this week's trading shows that there's still some discernment in the biotech IPO space. And it matters for the fall calendar, too. Biotech has been a very reliable sector all year, with average returns well ahead of the market. Every clean print recruits more filers behind it. And then last up, I'll mention that in addition to the biotechs, we saw a California regional bank IPO. River City Bank priced below the range and raised 122 million, a decent 4.4% return. Not much to say there besides the IPO market just continues to broaden beyond some of its core themes. All right, so now for the story that dominated much of the week, and honestly, the one that we've been building towards since June. SpaceX had its first public earnings report and the first lockup release in the same week. It had to be probably the most talked about lockup release ever. And the stock finished up 23% for the week, nearly back up to that $135 offer price. That's a strong result, mostly driven by Friday's trading. In fact, the stock traded up or down 5% every single day this week. It was down 14% on Wednesday and then soared 16% on Friday. Not your typical $20 trillion dollar stock. And as we've said before, sometimes the damage is done heading into the lockup release. I think we saw that this week. No one was surprised by it. We've been talking about this lockup for a month, so public shareholders were kind of selling into that event. And then when we didn't see insiders dumping their shares, that lack of insider selling turned into a buy signal. Now, of course, credit where credit's due. The improved AI sentiment across the whole complex did a lot of the work here. That was a very important backdrop for the 23% rally for SpaceX this week. But of course, this matters beyond just SpaceX. Every mega IPO candidate in the pipeline just watched the largest deal in history absorb a tradable float that potentially doubled and then saw it rally. That is the single most important data point for Anthropic, OpenAI, Databricks, all these mega IPOs that are in the pipeline. We've talked about this sequencing logic for months. Each deal de-risks the next. SpaceX breaking issue in July lowered the odds of those mega IPOs in the fall. But if SpaceX can reclaim that offer price in August, that brings those odds back up. To be fair, this was 1 week and one lockup. There are, 14 more lockup releases for SpaceX in that lockup schedule. So the supply story is not finished. It's just off to a better start than a lot of the bears expected. Which brings us to the calendar, and this is officially the last call for the summer IPO market. In a typical year, you'd see one more week of deal launches before things go quiet until September. So anything in the pipeline that doesn't launch is effectively making a decision right now to go into the fall. A week ago, it looked more like the summer IPO market was coming to a close for sure. But after this week's rally, maybe some will sneak onto the calendar. Who knows? But as for what is on the calendar, we've got one China-based company, Londian Weisan New Energy Tech, ticker FOIL, FOIL. This is a China-based company raising 75 million with Cantor in the lead. They call themselves the world's largest producer of copper foils used in lithium-ion batteries. So, downstream products, that means electric vehicles, energy systems, communications equipment, and electronics. Thematically, that means electrification, batteries, and, there might be a AI data center thread you could pull on there too. Copper has sort of been the quiet AI adjacent trade all year. Three interesting things here. I'll be quick. Number one, this is a pre-bought deal. At the launch, the company noted that it had secured indications of interest covering about 115% of the offering at the midpoint. So it's already got kind of a low float at less than 5%. So if those cornerstone investors don't sell, it could be a volatile stock. Number two, this company is being run by a 25-year-old co-CEO who has control of the company. Whenever I see a CEO in their 20s, I always wonder, what am I doing? Why aren't I running the largest producer of copper foil used in lithium-ion batteries? Just kidding. I love my job. But this one has an interesting management team, worth keeping an eye on. And then number three, this company is in a good space, but Chinese IPOs have not been well received on US exchanges lately. The last one to do it, used car platform DSC Holdings, it had a pretty disastrous debut. That could explain the cornerstone buyers lining up now to, make sure it prices. And there is technically one other IPO on the calendar, Robinhood Ventures 2, Robinhood Ventures Fund 2, rather, targeting 200 million. We don't count closed-end funds in our IPO stats, but it's an interesting deal regardless. While their earlier fund had a handful of larger tech unicorns, this one has a portfolio of dozens of smaller private tech companies. I know we've talked about companies staying private for longer and the death of the small cap tech IPO. So, maybe this is a new way of owning small, promising tech startups, closed-end fund. Unlike with an IPO, though, with a fund, you have no idea what the operations of these companies look like. Something to think about. All right, now for the scoreboard for existing stocks, because with the Renaissance IPO Index, there's some symmetry in this week's winners and losers lineup. The index winner and the index loser were both AI-powered diagnostics companies. Same sector, same week, completely opposite outcomes. First up, we had Caris Life Sciences up 45.1% on a beat and raise. This had been a downtrodden name before this week. It was trading below its offer price, but now it's back in positive territory. And then on the other side, the loser, BillionToOne, which had been an all-star, traded down 32.6% this week. Put up a decent quarter, but merely reiterated 2026 guidance. A lot of expectation heading into those earnings, but no fireworks coming out of Q2. And that's a good lesson. Sometimes it's not about the sector, and it's not even about the quarter. It's about that gap between the print and the expectation. People had written off Caris and were betting on another beat and raise from BillionToOne, so a little bit of opposites there. All right, zooming out to recap, but what did this week actually settle? Three things. The July AI sell-off has reversed. Biotech and once again AI infrastructure are the most reliable deal engines in this market. And lastly, SpaceX survived that technical event everyone was dreading. Put those together, and the fall setup looks a lot better than it did 2 weeks ago. Biotech and AI infrastructure are going to be the two dominant themes into September. That hasn't changed all year, and this week reinforced it. The big one is SpaceX. If that rally holds, it materially raises the odds that we get a mega IPO from Anthropic or OpenAI this fall. Both of them are watching the same chart everyone else is. Now, an honest caveat, this is a market that changes its mind quickly, obviously. I wouldn't over-extrapolate one good week any more than I'd over-extrapolate a bad one, especially not when the IPO market is being guided by an industry as dynamic, costly, and revolutionary as AI. But the constructive read is that the machine kept running through the rough patch, deals priced through the drawdown, filings kept on coming, nothing broke. The IPO market just proved that it can take a punch and bounce back. And now to wrap things up, what are we watching in the final weeks of the summer IPO market? Well, Foil, next week's London Waysan New Energy Tech, for one, because it's basically the only deal on the calendar. That'll give us a read on whether small cross-border deals can be winners. And then, I'm sorry, I swear we'll stop mentioning SpaceX when it stops being relevant, but we'll have to see if it can reclaim that $135 offer price and hold on to it. That would really spur some of those mega IPOs to price this year. And I will mention that SpaceX does have another lockup release in less than 2 weeks. So one light release is encouraging. Two would start to look like a pattern. I'm also watching out for any last-minute launches before the summer lull. If a name jumps the gun this week, that tells you the issuer really liked what they saw on the tape. Some possible launches include defense company Lintris, men's apparel retailer Tailored Brands, nuclear equipment provider Holtec Nuclear, and a few others. And then honestly, I'm looking out for the fall pipeline. From this point, the interesting question isn't what prices next week, it's who files in the next 3 weeks for a September launch. So the summer IPO market is basically over, but the setup going into September just got a whole lot more interesting. And that's it for this week's winners and losers. Get the full newsletter in your inbox by clicking on the link in the description. And thank you everyone for listening. And before we go, please listen carefully to our full disclosure. This podcast is for informational purposes only. Renaissance Capital's statements should not be considered investment advice or a recommendation to buy, sell, or hold any particular security. Certain of the statements contained may be statements of future expectations and other forward-looking statements that are based on Renaissance Capital's current views and assumptions and involve known and unknown risks and assumptions and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements. Past performance does not guarantee future results, and one cannot invest directly in an index.